3 months ago, I actually launched this book, How to $1 Million. And in that book, it focused on the steps, the vehicles to take to get to the first $1 million. But today, I'll be sharing with you, actually past your first $1 million is actually much easier to make the subsequent $1 million. And why so? Now, if you have $1 million, you realize that you firstly can entertain higher risk ideas, correct? In Singapore, MAS has this definition, accredited investor, which means if you have more than 2 million investable assets, you can access products that are not retail protected. And what are these products? A, hedge funds. Not that they are good, they're very opaque, but again, these are instruments you can access. 2, pre-IPO deals that are wholesale. 3, you can buy wholesale bonds. And 4, you can actually buy projects that are not retail ready. I actually came across this idea by FRAXTOR. From my understanding, they only entertain accredited investors right now. And the concept of it is you can actually buy properties, GCBs, landed properties in Singapore with a co-sharing method, and they actually use tokenization, which is on blockchain and stuff. So these are interesting ideas that if you were to buy yourself as a retail individual, you can't quite access. It also impacts other stock investing methods, such as you can buy higher risk stocks such as Coinbase. Coinbase is actually the first crypto exchange that listed on New York Stock Exchange. And right now, Coinbase seems to be doing well, but crypto is still at the infancy stage, which means the profits that the company generates is very difficult to predict. That's why I classify it as a higher risk stock. You can actually entertain that, especially if you have enough capital. A second point to add is actually you can start to invest into properties. As we know, properties is a big deal, which means you need to down pay large sums amount of money. And that's why when you have $1 million ready, you are able to do property investments, whether it's residential or industrial. And the biggest part is property investments, the quantum is big. So even though maybe the real return is slow, but the quantum size is big, which means if you generate 10% on 100,000, it's still probably smaller than 5% on $1 million. So you get that logic. And the third point on why you can actually make subsequent millions a bit faster is actually in terms of the borrowing costs. I don't know if you've heard of these before or not, but I really want to share that with you. And before that, if you want to smash on like, smash on subscribe, I'll be launching more podcasts like this to help you in your financial journey. Mortgage cost for someone borrowing 200,000 is different from somebody borrowing $2 million. I think that's logical and something you probably already guessed. And I can confirm it's more or less true. And that does not stop just at mortgage. That also extends to other forms of margin. I've actually a previous video on the main channel that touched on leverage annuities. And if you are a retail customer, your cost of funding for borrowing to buy retirement products, annuity plans, is more expensive than someone who is a private client. The cost of funding for someone who's retail could be 1.2%, but someone who's in a private tier, borrowing a big sum of money, doing a big plan, can get cost of funding at 1%, 0.9%, or even 0.8%, depending on size. Things can become negotiable, especially when the quantum becomes big. Which also fuels the rich get richer because the cost of funding for the investment idea is smaller than someone that is actually investing a small amount. And that's why past your first $1 million, you realize that to get to subsequent million, it is a lot easier. And if you have similar experience, share that in the comment sections. I'll be keen to hear your journey also. And with that, inviting you to previous podcasts I've done on millionaires, maybe can share a thing or two with you further. With that, I'll sign off. Take care and goodbye.